Product market fit is a death trap for startups. Not understanding the role of product market fit and the definition of product market fit is a startup killer. In this video, we'll take you through exactly what the role of product market fit is and exactly what the definition is, so you don't end up failing because of a lack of understanding of product market fit. So let's start off by looking at the role of product market fit. And as you can see here from this diagram, the journey of a startup typically starts off in what we refer to as the search phase. The search phase is where you're searching for a business model that is worth scaling. Quite often when you're starting out on your journey, you go through these, what we often refer to as speed wobbles, where you're trying to figure out what is the right market to go into, what is the right problem to solve, what is the right offering and the way to package that offering in order to get to product market fit. And as you start to figure out the answers to those questions and you manage to get paying customers and you manage to generate revenue and profit, then there's a real temptation to continue to go on that journey and just keep growing the business quite slowly. The challenge with this approach that the majority of startups take at the behest quite often of the startup ecosystem and their support network that doesn't have the experience they need to support successful founders is that what you're building here is a startup that is not venture backable, because this level of success, this slow and steady growth rate is not enough for a startup with lots of innovation risk, particularly when you've got investors that are coming in and those investors expect really high returns to compensate them for that risk. And they expect that some of the founders that they're investing in will fail, and the ones that succeed are going to have to cover the losses for all the rest. So as a consequence, the kind of growth curve that you expect to see in a startup business is more like this black line, where if you speak to any typical professional startup investor that really understands what it means to invest in startups, they'll tell you something like they want between a 10 and 100 times return on their investment. That's what they're looking for, because it is these winners, those companies that are able to do that, that covers the losses for those that don't. And it is really difficult to pick winners when you're an investor. So you have to work in portfolios and you have to back many winners, and you're only expecting that a few will emerge. But as an individual startup, you have to be capable of being one of those winners. So if you're not trying to get yourself onto this black curve, you're already setting yourself up for failure. And this black curve, the main feature of this black curve is this near the curve, which is really the hockey stick. It's this hockey stick effect that we look for as startups, because this is the transition when we go from just average growth to that explosive growth. And what is it that enables us to make this transition? Well, that's what product market fit is. It's when you're able to get that explosive viral growth that drives that much higher growth rate. That is the definition of product market fit. And the important thing to understand is the role of product market fit is to signal to the company that there can now be a transition from growing for learning to figure out what market should I be in, what set of problems should I be solving, what sort of solution should I build, and transitioning to, now I understand all of those things, I've validated a high growth business model and I can focus on scaling up. And so many startups and so much of the startup ecosystem that are supporting startups miss this point. They don't understand that there is a growing for learning phase of startups and there's a growing for growth stage of startups. And they try and start that growing for growth stage far too early when they've got a suboptimal business model, and all they do is end up growing along this grey line. And they're not then able to attract the quality of investors that they need. They're not able to attract the quality of staff they need. And quite often they just simply go out of business, and it is a major cause of startup failure. So let's recap on what the definition of product market fit is. And there are 5 key parameters that we use to define product market fit. The first is you've created a product that solves a pants on fire problem for a specific group of customers. We call that your beachhead market, and that market has to be big enough that you can then get these customers to become raving fans and repeat buyers. This means they love your experience and they are resubscribing. If it's a subscription business, if it's a transaction business, they're having multiple transactions. They now love your product. And they can't just be passive. They have to be raving fans that also become advocates. They've got to tell all their friends, family, and colleagues how awesome your product is and that if you've got the same problem as they have, you'd be crazy not to start using your product or service to solve that problem. And when that happens, this creates a positive feedback loop where your customers, your paying customers, become your number one marketing and sales channel. This is what drives that hockey stick growth and the exponential feedback that we see. And finally, now you don't need to focus on pushing your product onto the market anymore using marketing and sales. You can now focus on growing the company. You are earning so much revenue that your problem is how do you satisfy the growth? How do you put the company structure in place to be able to satisfy the growth? And this is the goal that most startups are just not simply trying to attain. Most of the startup ecosystem is not helping startups understand that this is what they must attain if they want to be successful. And as a consequence, startups spend years growing really average business models and going out of business, rather than staying in this growing for learning phase and optimizing, looking to learn, how can I find better customers? How can I define the definition of better customers? How can I understand their problems even more deeply? How can I understand how I can create a solution that is easy to adopt and easy to use and can create fans and advocates? And the startup ecosystem generally lets founders down because they allow founders to try and grow for growth too early. And in fact, they often encourage that. So if you're a startup founder and you don't have this very strict definition of product market fit, and you haven't been using this as a signal to transition from growing for learning for growing for growth, then this video should really help you set yourself up for success.